Welcome back to Mohammad Khalid. Today's crypto update is all about analysis. Why did markets dump $19 billion and is another rally just around the corner? What are institutions really doing during this volatility? Let's break it down, the key data, macro factors, technical shaping this wild October. As you can see over here, Bitcoin is currently trading at $111,475, Ethereum is there about $3,805, BNB is $1,225, XRP is $2.38, Solana is $178, Tron coin 31 cents, Dogecoin is 18 cents. I bought it at 14 cents. I put a limit order and that's why I bought it. If you guys want to know about how to put limit order, you can just comment on the comment section and I'll make a video about stop order, limit order and everything. Cardano is at 64 cents and the crypto market endured a sharp sell-off, dropping a nearly $19 billion in value with over 75 out of 100 coins in the red. Bitcoin is currently hovering around $19,000, down over 8% from its weekly high. Ethereum is followed suit down about 1%. Trading volume spiked 206 billion, a clear signal of panic and post liquidation across major exchanges. Meanwhile, BNB has shown resilience, bouncing above 130 thanks to steady accumulation from big holders. Root causes about this dump. This latest crash was not just about crypto. Macroeconomic headwinds dominate, especially after the US President Trump delivered a 100% tariff shock on China tech exports. That move sparked global risk asset, causing stocks and crypto fall in tandem. Institutional traders rushed to the risk and over 7 billion leveraged crypto positions were liquidated in just 1 hour. Geopolitical risk plus the absence of new market catalyst has investor cautions and the defensive. Here's the interesting part. While retail capitulated, the data shows institutions are accumulating quietly and strategically. October ETF flows remain strong, with Bitcoin spot ETF absorbing around nearly 440 million and Ethereum ETFs seeing the modest net inflows. Research from State Street report that 60% of institutions plans to increase their crypto holding in the next year, treating digital asset as a real strategic lever, not just a speculation. ETM inflows are sucking coins off the market, and the BlackRock iShare Bitcoin Trust alone manages over 87 billion in BTC, straightening a price floor below the surface. This structure is utterly different from past cycles. Technically, Bitcoin sits just below a major liquidation cluster at $121,600. If price manages just a small upward push, a wave of short covering could force BTC toward $125,000 in a short squeeze. The market fear and greed index just slide 55 to 54, still in neutral but tilting fearful. Analysts are watching this upcoming US Federal Reserve policy meeting as the next big trigger. If the Fed signal rate cuts, expect renewed institutional inflows and higher volatility ahead. In summary, this sell-off is a much about macro fear and positioning as a crypto fundamental, but with deep-pocketed institution accumulating and ETF flows underpinning market structure. History shows that the downtrends often become launchpad for the next bull phase. Watch for any Fed pivot, keep an eye on ETF data flow, and don't be surprised if volatility remains high. Remember, none of this is financial advice. Always do a research before investing. That's your focused crypto analysis for today. Like, share and subscribe and leave a comment with your BTC October price target. Stay tuned for more deep dives right here on Mohammad Khalid.